Or is LeBron going to win it all tonight?
All right, welcome everybody to another live event, and I want to thank you so much for joining us today. My name is Grant White, Portfolio Manager with Endeavor Wealth Management here at ITI Securities, and I'm really excited to be joined by our guest, Arent Sabasch. Arent is one of our insurance specialists who we work really closely with when we're doing our planning work for our clients, and so I'm really excited to have him out to you today because we're going to be talking about some unique strategies which are of interest to a lot of our incorporated professionals, our dentist clients, and our incorporated medical doctor clients. And for the most part, I think everyone in that group is pretty familiar with the more traditional forms of insurance planning, whether it's life insurance related or disability insurance related. But Arent's going to be enlightening us a little bit more on a different kind of solution that could not only be beneficial for yourself, your families, but also your business planning with your corporation. And today we're talking about critical illness insurance. And in many cases, we would argue, or there's a possibility that critical illness insurance is even more important than some of those more traditional forms of insurance. So, Arent, welcome. Thank you so much for joining us today. How are you doing?
I'm great, Grant. Thanks for having me.
Great. Thanks for joining us. So, just starting off, Arent, why don't you enlighten us and tell us a little bit more about what is critical illness insurance?
Okay, so again, most people know about life insurance. Professionals in particular, they probably heard about disability insurance. Not as many people know about critical illness insurance. And so what it's really intended to do is protect us, our families, in the case that we do become critically ill. So what does that mean? Well, historically, the top three conditions that are covered under these type of policies are cancer, heart attack, and stroke. And generally, they'll make up 85 or 90% of claims. Now, most carriers also offer coverage on 22 to 23 other conditions, coma, paralysis, etc. But the big three are those cancer, heart attack, and stroke. So the way that critical illness insurance works is gives you a one-time lump sum payout, tax-free to you. And basically, you can do what you want with that money. There's no limitations. It's yours to have. And so, if we take a step back and talk about disability insurance, well, disability insurance will replace your monthly income, 5, 7, 10, 20 grand a month. But critical illness insurance gives you that one-time hit, 100, 200, 500 grand. And suddenly,
Wow.
you have freedom, right? You have financial security in a time of need when you don't want to worry about finances.
So maybe give some examples of like what have you seen people use that money for? Is it something that it's a good you get a check, right? And what you can do anything you want with it?
Yeah, great question. I think that leads into why do we do this? Well, it's like I said, we don't want to worry about financial matters when we're trying to, get better, go through treatment, and people can use it for a lot of different things, whether it's just, replacing income and providing that nest egg, medical expenses. That's a big one. I'll come back to that, but a lot of times what we see with individuals is maybe their spouse has to take time off work. Now there's less income coming into the household. Well, this allows them to do that. Maybe you need to fly some family out to make some meals, take care of the family while you're in treatment. Well, these things all cost money. And basically, again, this gives us that freedom to do what we need to do at those times.
So do you see that it fits really there's a gap in the other forms of insurance? Like if you've just got life insurance or you just got disability, this is filling in that gap?
Yeah, you're so right, Grant. And I think, what's important to note is we always like to cover off the life insurance need because it's the most catastrophic event a family will go through, right? The passing of a spouse, a child, whatever. But when we look at the numbers, we know that the likelihood that we're going to get cancer, have a heart attack, much higher. And it's a real possibility for people. I mean, I was looking last night. My wife runs a business. I run a professional practice, and we're both in our late 20s. And before age 65, there's almost a 40% chance that one of us will become critically ill.
Yeah.
Very high percentage, right? That's not taking a chance. I mean, that's a real possibility, and so people want to cover that off.
Yeah, I mean, especially if you're the breadwinner in the family, like most of our, again, our incorporated professional clients, whether you're a dentist, you're a practice owner, even an associate dentist, you're probably the breadwinner in the family, making a couple $100,000, $200,000-300,000 a year, right? And you think if you incur a critical illness, not only do you have like the expenses associated with that, but there's also the loss of income during that period of time, like so like the bills just keep mounting up and so on and so forth.
Business expenses, I mean, it can be endless, right? And people know what their fixed costs are every month at home, at their business. It adds up very quickly when we aren't earning income.
So, speaking of businesses, and because again, we're talking about primarily incorporated professionals. They have their own corporations, their own businesses. How does this type of coverage benefit them? Not just from like the, obviously the personal side, the family side of it, but there's business benefits as well.
Yeah, great question. I mean, I think people always say time is money, but I actually would also say that money in business buys you time.
Right.
And like I said, if you're running a dental practice and you have $5, 10, $15,000 of expenses every month, I mean, how long can you go without revenue or with, very hindered revenue, very reduced revenue? Like, these professionals know those answers, but generally it's not a very long time. And so there's a few applications when we look at business planning. I mean, yeah, number one, are we replacing revenue that's normally coming into that business from that professional that's no longer there? Disability insurance is great for that professional. It makes sure them and their family are taken care of. But what about the business and its employees? They want to know that they're going to have a paycheck for the next 6 months, right? So that's one application. I think another big one to note is really like protection of retained earnings too, right? So business owners oftentimes will build up cash in their business. Maybe it's for expansion purposes. Maybe it's for retirement purposes. And that's great that they have it, but they don't necessarily want to have to use that, draw upon it for a scenario like this. Why not have an insurance company write you a check for $500,000 instead of you taking that out of your hard-earned retained earnings and the cash you built up in your business? I mean, protecting that alone.
Well, no kidding, right? I mean, think about how much time you spend building up your assets, how much, how hard you have to work to build those up. And yeah, I think what we would hear from a lot of people is like, oh, well, if something like this occurs, like I've got money, I'll just, self-insure effectively. But, when we look at the cost of these policies versus the potential benefit, and like you said in your case, there's a 40% chance between you and your wife of one of these illnesses or injuries occurring. So there's a 40% chance you're going to have to rely on those assets, or you could use an insurance policy like this, and you're paying pennies on the dollar for the insurance policy.
Yeah, you're so right, Grant. You are paying pennies on the dollar. And what we really want to accomplish here is that, you sit down, you have a plan for your vision, you have a plan for your family. And we want to make sure that if one of these critical illnesses does occur in your life, that plan is unencumbered, right? We want to make sure you're trying to go from point A to point B. And we want to make sure that this doesn't blow that up. We want to plan for these occurrences because they do happen, they are common. And I think on that point too, Grant, like, listen, I just want to share because we're all professionals. We've all worked with clients for years and we have our own stories. And I know for me in the last 3 years, I paid 3 critical illness claims.
Yeah.
Just kind of, you never think the call's coming until it comes. And one story I always share is, a young client of mine, I had sold them a policy not even 2 years prior, 32 years old. And I got the call, hey, there's a brain tumor covered on my critical illness insurance. And sure enough, right away, we put in a claim. And that was a call I never thought I'd got when I was sitting there 18 months prior. And, to even expound upon that, they had their disability coverage kick in. They were getting their income mostly replaced. But when I walked through the door with 75 grand, hey, life looked a lot different financially and they could focus on getting better.
Yeah, like I've never been so shocked to hear just what expenses aren't covered under provincial healthcare plans. And I don't have the exact stats on it, but numbers as high as like 40% or 50% of some expenses for treatments and medications and things like that you're not going to say no to because you're doing what you got to do to get back to being healthy or recover. But and most of that stuff is not covered, or it's only half covered or so by provincial healthcare plans.
Yeah, you're right, Grant. And I think what we're seeing in bigger provinces too, like Ontario, is that a lot of these treatments, they're less and less covered. I mean, listen, we all know how much of the fiscal budget goes to healthcare. And we also, with aging demographics, that there's worries about, is that even sustainable? And so, if we think that's an issue today, I think as time goes by, less of these treatments are going to be covered, and it's going to come out of the individual's hand.
Yeah. So let's talk a little bit about tax as well, because there's a tax planning component, and where you own this insurance, and who's paying the bills for it, if it's personally or your corporation. And I don't know about you, Aaron, but all of my professional clients, well, for the most part anyway, prefer to pay as little tax as possible, basically, and so maybe you can touch on that and some of the business planning components that can come along with it.
Sure. Well, listen, we get it. Tax is everyone's biggest expense, period. It is today, it will always be. And so, hey, we agree. If we don't need to pay as much tax, we don't want to either. And so that's a great question, Grant, because we talk about business planning, and obviously there's always a need there for insurance to protect the business, to protect the family. But there are ways we can structure these that do have some efficiencies. And in Canada, most of the professionals we work with, particularly on their first 500,000 of business income, in Manitoba, they're only paying about 9% tax at the small business rate, which is very efficient. And compared to their personal incomes, which are generally in the highest marginal tax rate and taxed at over 50%, it's kind of night and day. And so what we can do with these policies is, because they're for business purposes, the business pays most of the cost. So that professional's using their dollars that are taxed at 9%, and they're paying the majority of these premiums, which is, easy to stomach, right? It's not a write-off, but it's pretty efficient dollars. And the way we can structure these is that if you don't claim, you can always get all your money back. It's a pretty good deal. You can get all the premiums you've ever put into that policy back. And one strategy we have is where most of the policy is paid by the business at 9%. A smaller portion is paid personally. And if that individual does not claim and takes the money back, everything gets refunded to them personally.
Right on. That sounds pretty good.
It's great.
So they're getting, so they're effectively, they're putting corporate dollars in. The corporation's paying for a portion of the policy, and then when the return of premium comes out, that can come out to them personally.
Exactly.
Yeah, I mean, and I think that a lot of, when you look at the planning work that we do for a lot of clients, it's around that. Like, how are we getting money? We've got money building in our corporation, but the goal is ultimately to get it out to them personally, and so they can spend it and live their lifestyles on it and do the things they want to do with it. So I mean, we don't hesitant to say the true benefit of this in terms of rate of return, but in a lot of cases we've seen situations where if you're looking at the pure tax dollars of some of these of the money that's coming out, if we were to just save money in the corporation, we'd often need a 6% rate of return, a 9% rate of return in the corporation to kind of make up for the tax benefit of the money coming out personally. And so you can have some significant benefits there from some of the plans that we've seen more recently.
Yeah, absolutely. It's a great strategy for the right professional. We use it often, especially with dental and medical practices. If it works, it works, and it's a nice way to kind of add an enhancement to this plan. And listen, when people can pay for something, not use it, and get their money back, it's always very palatable, right? Because we know we need it, but if we can get everything we put in back, build in this efficiency, getting some of those corporate dollars back to us personally, hey, very happy with that.
And that's assuming you don't need it. I mean, we hope everybody that goes into these, they don't need them, because that means they haven't incurred one of the 25 illnesses or injuries or so, right? So that's always the goal. But yeah, we know life gets in the way sometimes.
Absolutely, it does. Yeah.
So, just speaking of life and as well, like, there's obviously the critical illness component, like the insurance benefit component of it. Well, people are working and they're in their careers. How about beyond like their working careers? Like, what are some of the options available after they've retired or after they decide to sell their business?
Sure.
What are your thoughts on that?
Well, the nice thing about some of these policies is that we can convert them down the line to long-term care insurance. And, again, like kind of bringing it back full circle and saying that, we have these huge medical costs in our society that are ever increasing, and we're concerned about, how much subsidizing governments are going to be able to do with this, and whether consumers or users will have to start paying for it. That's always a concern, right? Like generally there's two things in our eyes that that kill wealth. And that's, like I just said, taxation, and it's medical emergencies. So we've kind of addressed what happens during your working life and where critical illness can play a role. But the other places, if you can convert that to long-term care as you age and need those in-home services, or even if you move into a facility or a residence, having insurance like that in place to take the brunt of those costs, also insulates your wealth for future generations. I mean, if you want to pass it on and your medical costs eat it up, that's probably not part of your plan.
Yeah, well, I think it comes back to choice at the end of the day too. Like people want freedom, people want the independence to be able to choose the way they want to live, and if you can give more opportunity for choice, I mean, I think this year we've learned a lot about people's plans in terms of like what senior care looks like. What does your life look like as you get into your later years, if you will? Where you thought like going into an assisted living home might have seemed like the greatest idea. Now maybe not so much, and that's part of that's from the pandemic, but part of it's like also just having more ability to maybe stay in your home longer, right? And so having solutions where you don't have to kill off your wealth, as you put it, but you can use a solution like this to give you more choice. I think that's invaluable.
Yeah, you're absolutely correct, Grant. Absolutely.
Right on. Okay, Aaron. Well, I think that's enough for today. I mean, that's a lot, obviously, as it relates to critical illness insurance. But there's definitely a lot of consideration people need to make. There's a lot of benefits that can happen for them personally, their family, and especially for their business, as you pointed out. And so it's definitely something that people need to take a look at, because again, we see it all the time, or we're seeing, a lack of it all the time, a lack of planning work about some of these opportunities that are available to people. So, Arent, thank you so much for joining us today. Everybody who's online or everybody who's viewing the recording of this, thank you so much for joining us and watching. Be sure to follow us. We're on YouTube. We're posting these on Facebook and LinkedIn. And so be sure to subscribe and follow us. Go to endeavorwealth.ca. Please reach out to us if you have any questions regarding any of these solutions, and we'll be happy to take a look at it for you. And or if you feel free to reach out to us, feel free to email us anytime. Thank you very much. Arent, thanks again. Appreciate your time.
Thanks, Grant.